Good evening, folks, and Happy New Year. We're in 2021, and wow, 2020 was an extremely interesting, chaotic, and happy for traders year. So, hope everybody had a great end of year. Hope you spent the New Year's with your friends and family and had as much joy as the government will allow us to have right now. So, there's that. Anyway, new year, we're back. We'll be having our regular schedule and meetings this week that's just starting. So let's get this show on the road. We're going to be going through our standard agenda. I'll look at the prior week, our currency strength meter, fundamental announcements on the calendar, look at the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. Starting with the ledgers, the long-term ledger is slightly down on closed trades. We have a few trades open right now, which are all at profit as I write this. So, and actually a nice healthy dose of profit. So we're technically up, but on realized closed out trades, we are down right now. The intermediate term ledger, no changes for the week. We have the same trades open we had the prior week. In fact, we haven't opened a trade in more than 2 weeks now. So these three trades that we have open are just carrying on. Also showing some nice profit. I think 2 out of the 3 are at profit. So that's a good thing. And the short-term ledger, we had one closed trade, which gave us a loss. So we're down about 5% on that one. And we had a euro dollar long, which was showing profit as the week ended. We unfortunately did not close it out before trading stop for the week. My bad. So this trade is carrying over into this week. And as I said, it is showing profit right now. So I'm not going to do a new ledger for this week. We're going to be carrying on with last week's ledger. So if you look at the ledgers in the email that's going to go out, both prior week and this week are the same exact file. So we'll just carry it on into the next week. So that's where we are. So we're starting the week out. Very unusual that we have a trade open on a short-term account, but there you go. It was bound to happen now and then, and it did. Notes and opportunities for improvement. Of course, this was the strangest end of year I've ever seen in my entire trading career, and it has been a long career. So this December was very atypical. We had Brexit going on, of course, the US elections, and a full-blown pandemic, or what they're calling a pandemic. I'm still not convinced of the reality of that, but there you go. I try not to give a lot of opinion here, but I can't help but share my thoughts. There was no lull in trading during the 2 holiday weeks as there normally is. Usually this time of year is dead. Didn't happen this time around. Probably one of the strongest trading periods in quite a while. And it happened in December when the market is usually. The USD continues at multi-year lows. It ended the year at multi-year lows. Commodities such as oil, silver, gold ended the year strong. And of course, we do have significant January events coming up. The consequences of the Brexit agreement are still playing out. They did sign an agreement late last year, and they're still trying to determine what that agreement means. So the pound is bound to be very volatile. My gut feeling is that the pound will appreciate. It is going to get stronger, but it might be a bumpy ride. U.S. election fallout, of course. President Trump still insisting he did not lose the election, and everything carrying on for a Biden inauguration in a couple of weeks from now. But there's still stuff that might happen between now and then, so who knows? And of course, all the COVID developments, second variation of the virus, apparently deadlier, whatever that means, since no one really, well, I shouldn't say no one dies of it, but a very small percentage of people actually die from COVID. This one, this new variation coming out of the UK is supposed to be a deadlier one, again, whatever that means. And of course, we have like 3 or 4 different vaccines that are starting to be administered to people as we speak. And of course, we'll gauge what effect that has. But all 3 things, Brexit, the election here in the US, and COVID, promise to keep the markets very bumpy and like I said, a very rocky ride. Relative strength meter as we kick off the year, the month, and the week. So if we look at the past week, we had quite a few movers. Silver, of course, appreciated 1.5%, and for the month, it was a 16% gain from November through December. We've had movement on some of the dollar pairs, some of it extreme, in excess of 1% on the Kiwi dollar, Aussie dollar also in excess of 1% for the week. This is just a week. If we go to the month, we had some pretty big movers. Aussie dollar almost 5% for the month. Aussie JPY 3.76, Aussie CAD 2.6. So those were some of the bigger movers, the Aussie pairs. The euro dollar gained almost 2.5%. Pound JPY 1.5%. Pound dollar 2.59%, and Kiwi dollar we covered already. And of course, on the opposite side of the equation, the CAD and the Swiss also gaining on the dollar by 2 and 2.55% respectively. USD JPY, one of the stragglers, actually moved to counter, and the yen lost ground to the dollar, a little bit under 1%. Of course, silver, the biggest mover, 16.69% appreciation in silver for the month of December, and gold at 6.85% appreciation against the dollar. So again, very, very nice movements to round out the year. Fundamental announcements we've got for this week. We've got a few. We've got the FOMC minutes coming out of the Fed on Wednesday. So we'll be starting our trading session a little bit early for the afternoon that day to accommodate. And of course, Jobs Friday, January the 8th, we have the non-farm payroll out of the US and the change in employment out of Canada, both happening at the same time, 8:30. So we will be trading those live. And with that, we move on to the charts. Oil had a really nice recovery, which started way at the bottom in May, crested sometime around the beginning of September, went sideways for a long period of 3 months at least, and then broke out in November into December and got to highs not seen since before the pandemic. Now, I've seen a lot of commentary saying that oil is going up because of the vaccines, that the market expects demand for oil to increase once more now that we have a vaccine. Pardon my English, bullshit. That is not the case. The increase in the price of oil started way before any credible vaccine release dates were there. So I'm not saying that it didn't have any impact towards the end, but the recovery in oil started way earlier than that. So don't listen to the talking heads too much. They will always try to give you an explanation of why things happen. And again, the explanation is probably has nothing to do with reality. There's a great book by Nicholas Nassim Taleb, or Nassim Nicholas Taleb, whatever his name is, called Fooled by Randomness. Give it a read. It's worth reading. People, and especially the talking heads, will always try to explain price action, and they'll, pull anything out of a hat. So I'm not telling you why oil is going up. I'm simply showing you that it did. Euro dollar is breaking out, of course. We are in the middle of a quite significant breakout. We had a little bit of a pullback on Friday, went down back to the trend line, but is still ending the year pretty much at its highest in multi-year. Again, the dollar is at multi-year lows. This is one perfect example of that. We'll be continuing to trade these breakouts, and an ongoing breakout, we don't know when it's going to end. So we'll trade it until the trend breaks. Same thing with pound dollar, going up, ending the year at its highest in the visible portion. Another one that's at multi-year highs. We haven't seen the pound this high since, pretty much since Brexit. It did stage a recovery at some point after Brexit, but it was short-lived. This one seems to have steadier legs. USD JPY dropping quite steadily. It hasn't moved much. Again, it actually went up. It more countered. It's not behaving the same way some of the other dollar peers are, but we can still see that it's moving steadily into dollar weakness. USD Canadian, same thing, not quite at its most recent low, but getting very close. And I do expect that one to continue breaking out. It's already in breakout territory. Did a bit of a correction, a bit of a test a couple of weeks back, but is now back firmly dropping. USD Swiss, same thing. It's in breakout territory and no telling when that's going to end. Aussie dollar, breakout territory. You're getting the idea, right? All of the dollar pairs are extremely either in breakout or getting close to breakouts and are at extremes not seen in many years. And last but not least, the Kiwi dollar and the dollar pairs also in breakout territory. And we do have a long-term trade on the Kiwi dollar trying to take advantage of however far it might go. We picked the Kiwi dollar because it is one of the strongest movers out of all the dollar pairs. For whatever reason, the market seems to be in love with the Kiwi. And of course, the dollar is dropping. So that combination is making the Kiwi dollar one of the better, faster movers. Moving away from the dollar pairs, Aussie Canadian also breaking out towards the top. I don't think this one is going to break out too much further. Of course, the market will do whatever it wants to do, not what I tell it to do. But I do think this one is overdue for a correction. Euro Swiss, we're ignoring, and for good reason. It's not doing much of anything. It's going crazy sideways, and until it breaks out convincingly, we're going to be leaving it alone. Euro pound, nice drop Thursday and Friday into pound strength, but still being stopped by that trend line. And we'll have to see which way the new year takes it. The euro and the pound might end up going the euro pound might end up going sideways simply because both countries are at a bit of a crossroads, bit of a stalemate, since Brexit will affect both of these, both the Eurozone and the UK. So we'll wait to see if we get a breakout, but until we see one, that's a convincing one, I'm going to be stepping away. Euro JPY at the very top of the chart. Another one I think is overdue for a correction. I think I have a pending order someplace to take us in short if we get a convincing break of that very long trend line coming from the extreme left of the chart. So if we get a break, a piercing of that trend line, we're going in. Otherwise, we'll wait and see what it does. Euro Canadian is, wow, look at that drop on Friday. That was a massive drop. We'll have to wait and see what the new week brings us, but that right there was a 150 drop in a single day. Friday seems to have treated the Canadian very well. Bounced off that trend line and dropped. Didn't quite make it to the Kumo even, but still, that's a massive move. Pound JPY, of course, stretching the envelope there, trying to break out of resistance as the pound appreciates, and the yen doesn't seem to be having a good time right now. So we'll have to wait and see. Of course, the Brexit fallout is going to be affecting all of these pound pairs. Get a breakout, this one might go quite a long while. I think next week I'm going to start looking at some of the monthly charts to kick off our quarter. So we'll see a little bit more insight on where some of these pairs might eventually go. Aussie JPY breakout territory finally pierced the top of the chart and kept going Wednesday, Thursday, Friday, and we'll have to see what the new week, the new year, the new month is going to be bringing us. Very interesting. This is another one where I think we're overdue for a correction, but it could still end up going up significantly more than we Euro New Zealand dropping to the bottommost level of support. So we're poised for a breakout, which again could take us anywhere. So another one we'll be looking at eagerly as the new year begins. Pound Canadian, very sideways, much like the Euro Swiss, but there's fundamentals behind this one that could have it move strongly in either direction. Depends what happens with Brexit, and depends, of course, on the Canadian economy and what impact the rising price of oil is going to have on Canada. Pound Swiss in a sideways pattern, but also with strong fundamentals that might make it break out of the top. And Pound Aussie, one of the more interesting pound charts since it is at the very bottom of the chart. I expect I don't demand, I expect a pound recovery. And this has been one of the hardest hit of the pound pairs. It's all the way at the bottommost level of pound weakness. So any pound recovery is probably going to send this skyrocketing, and it might even go to the top of the chart. We'll have to play it by ear and play it safe. But there is a pretty good chance that this is going to be one of the more generous charts that we have right now. And it is the last of the charts that we have right now. Setups we see in progress as the week begins and the year begins. Of course, the Brexit post-agreement effects. So we have to see what's going to be happening as the UK and the Eurozone pivot around each other and see what their agreement means. The dollar pairs, of course, are very vulnerable right now to the election fallout and of course, the ongoing dollar weakness. New Zealand, the Kiwi is showing strength and not stopping. So keep a close eye on it, especially on some of the pairs where the movement is only just beginning, and that gives us more potential for gain. The Swiss pairs, they look ready for movement, but I'm not too convinced yet. Yes, the Swiss franc is a safe haven currency, but it looks like the market is not too in love with the Swiss right now. We'll see. And the euro, of course, seems to be struggling while the market decides whether Brexit is good or not, or the Eurozone. So stick a pin in that one. There's probably going to be some really good movement on the euro pairs, but your guess is as good as mine as to whether that's going to be going up or down. And that's going to be it. Parting words, of course, Happy New Year. Happy New Year, everybody. First of all, thank you so much for being with us all through 2020. I know it was a bumpy road for all of us, and I'm happy we all made it through. December, as I've been mentioning, a very extraordinary trading month, especially given that December is usually stagnant. January might just continue that trend. It looks like the market is not going to be stopping anytime soon to take a breather or to celebrate the holidays. We'll be looking at how best to take advantage of what's usually the best trading quarter of the year. January through March is usually a great trading environment. So stay tuned for that. We're going to be doing a lot of fun stuff to kick off the year. I'm not ready to reveal what that means, but stay tuned. Good things are coming. That's going to be it for us this Sunday. And of course, we look forward to the trading week with all of you guys and going back to our regular schedule. Any comments or questions from anyone? Okay, folks, thank you very much. That's a wrap. I love you all. Happy New Year. And I look forward to talking to you as we kick things off. Bye-bye.